Some ETFs tend to live a little under the radar as they quietly and consistently stack up those total returns. Today, we are going to shine the light on some of these cool as ice ETFs. Fasten your seatbelts, folks. This is going to be a chilly one. To break the ice, let's talk about what I mean when I say when I say cool as ice ETF. In a nutshell, ICE translates into, I for income, C for consistency, and E, that stands for edge, as these ETFs need to have a little something to give them that extra edge for sure. The idea of ICE isn't just a catchy acronym. It's a way of thinking about your investments with clarity, purpose, and of course, long-term success in mind. When it comes down to it, the market, it can be rather noisy for sure. There's always a hot stock, a screaming headline, or, perhaps even a finfluencer promising 10x gains by next Tuesday. Oh boy, I sure wish gains were that easy. Nonetheless, if you're building real wealth, the kind that you can fund your retirement, create generational security, or just give you peace of mind, you don't, you really don't need all that noise for sure. There is, of course, a time for income investing, especially in retirement. However, getting there can be a different game, and combining income consistency and edge, ICE, it's not a bad way to get there. And despite the name, it's not quite the slippery slope. A sub to the channel is a great way to get to that future content. In qualifying today's list, I looked at more than just yield. The ETFs chosen today were selected based on a balanced mix of income reliability, historical performance consistency, and, that clear strategic advantage, what I'm calling their edge. I did add a little bit of extra priority to ETFs with a monthly or quarterly dividend for sure, some reasonable fees, as well as well diversified holdings to avoid concentration risk. So diversification definitely in play today. Sector balance, payout sustainability, and long-term total return potential were absolutely key filters. Today's list is, of course, sorted by their 1-year total return. So without any further ado, let's do this. Kicking off our list at number 5, we got the iShares Global Dividend Growth ETF with a ticker of XDG. This iShares ETF, they're holding about 300 global companies with a strong history of growing their dividends year after year. In addition to North America and Europe, this one does provide some pretty good exposure to both Japan and Australia. I'm loving that. I do have a fond spot for the Australian stock market for sure. At the time of recording, their price comes in at $28.07, and they have an NAV of $27.99. Those assets under management, 467.40 million. Looking at the fees, as I said, I'm liking them low. Management fees 0.20%. Management expense ratio 0.22%. So that's not too shabby. Their dividend, they've got a yield of 2.93%, monthly dividend of 7.4 cents per share. Switching on over to their returns, their 3-year return on investment comes in at 26.44%. Factor in those dividends, we get a total return of 36.45%. On their 1-year return on investment, that comes in at 8.55%. After we add in the dividends, total return 11.75%. That 3-year annualized, that's coming in at 10.92%. Their edge, it comes down to their dividend stability, married to their overall capital appreciation potential. I'm liking both. This ETF also has that strong global core for sure. So this is a very good diversification play. I'm liking that for sure. Okay, in our next spot at number 4, we have the Global X Active Global Dividend ETF with a ticker of HAZ. This ETF holds a basket of global dividend players from, North America, Europe, and of course the Asia Pacific. It does, and I like this, it does focus on blue chip companies with stable cash flows and of course solid yields. At the time of recording, their price was coming in at $38.70, and they have an NAV of $38.69. Those assets under management of 480.15 million. Looking at their fees, they have a management fee of 0.65% and a management expense ratio of 0.77%. This is one of these ones that does also have a trading expense ratio. So that's an additional 0.02%. I like to mention those when I see them for sure. Looking at their dividend, they have a yield. This is the smallest on the list today, 0.99%, quarterly dividend of 10 cents per share. So this one is all about the growth. Looking at that growth on their 3-year return on investment, that's coming in at 43.28%. Factor in the dividends, a total return 50.03%. On their 1-year return on investment, 11.11%. Total return after we add in the dividends, 12.16%. That 3-year annualized looking pretty healthy at 14.48%. Their edge is that exposure to those global blue chip companies, which, it's pure geo-diversification gold for sure. Coming in at number 3, we've got the BMO US Dividend ETF with a ticker of ZDY. This one is Canadian hedged, so it does remove all of those currency fluctuation issues. Now, they do hold a pretty diversified basket of high-quality U.S. stocks with strong dividend histories. They focus mostly on healthcare, consumer goods, industrials, and, to a lesser degree, technology. At the time of recording, their price comes in at $45.37, and they have an NAV of $45.41. Those assets under management, 594.29 million. When it comes to their fees, their management fees coming in at 0.30%, management expense ratio 0.33%. A lot of threes. Looking at their dividend, they do have a yield of 2.13%, monthly dividend 7 cents per share on their returns. That 3-year return on investment, 32.35%. Factor in those dividends, total return 40.23%. On their 1-year, that return on investment, 9.99%. Adding in the dividends, total return 12.27%. That 3-year annualized, 11.93%. Part of their edge is being fully Canadian hedged, which in effect will protect against USD swings in your portfolio. The bigger edge, though, in my opinion, may be their overall US diversification. It's nice because it's not getting tech heavy as a lot of ETFs do when investing in the S&P 500. Okay, in our almost top spot at number 2, we have the Invesco Canadian Dividend Index ETF, ticker of PDC. This ETF holds roughly an equal weighting of 50 Canadian dividend-paying stocks with an additional equal sector weighting. In a nutshell, the game of this ETF is synonymous with diversification. At the time of recording, their price is coming in at $35.11, and they have an NAV of $35.10. Those assets under management, 802.02 million. Looking at their fees, they have a management fee of 0.50%, management expense ratio 0.54%. Looking at their dividend, their yield, one of the higher ones on today's list, 4.51%. Monthly dividend, 14.1 cents per share. Looking at their returns, their 3-year return on investment, 5.34%. Factor in the dividends, total return, 17.76%. On that 1-year return on investment, 11.25%. And that total return after we add in those dividends, 16.11%. Their 3-year annualized, a little low, 5.60%. When it comes to their edge, it is all about that equal weighting, and that can be a huge advantage for sure, as they do not get over diversified into a couple of sectors. As many Canadian ETFs often do, you'll find a lot of Canadian ETFs heavily diversified into financials and energy. This one here, Equal weighting across the board. I love it. It's great for diversification for sure. Okay, in our top spot, we've seen this one before. The iShares Canadian Dividend Aristocrats ETF with a ticker of CDZ. This ETF, yep, they hold more than 60 companies that have all one, well, they all have one thing in common, a tradition of increasing their dividends. They're the dividend aristocrats, meaning they have all raised their dividends for, well, at least bare minimum 5 years or more consecutive dividend raises. You gotta love that. You gotta love that. At the time of recording, their price coming in at $36.50, and they have an NAV of, well, $36.50. Those assets under management, 921.91 million. Looking at their fees, their management fee comes in at 0.60%, and they have a management expense ratio of 0.66%. When it comes to their dividend, they have a yield of 3.79%. That's a monthly dividend of, well, 12.8 cents per share. On to their returns, that 3-year return on investment, 14.17%. Factor in those dividends, total return, 25.56%. Looking at their 1 year, that return on investment, 14.53%. Adding the dividends in, we get a total return 18.80%. Their 3-year annualized, that's coming in at 7.88%. When it comes to that edge, CDZ has it for sure. By filtering companies for dividend growth and not just a high yield, it reduces the risk big time when it comes to dividend cuts. Okay, I do like these ETFs for sure, and it helps that they check all the boxes regarding ICE. So, income, consistency, and of course, that edge. Gotta love it for sure. I have a feeling we will see more ICE content, well, somewhere down the road. Obviously, if this video does really good, it'll be sooner than later. So, that's up to you guys. If you are interested in any of these ETFs we looked at today, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on that table. Let's continue that learning journey. Check out this video on AQN. Thank you for watching, and I will see you in the next video.